Welcome back, and thank you so much for joining me in today's video. This is based on my own analysis of what's happening right now in our US housing market based on the latest data we have from Realtor.com. There's some very interesting dynamics happening right now in our US housing market. In today's video, I'll touch on home prices, housing inventory, new listings, and also the share of price reductions and much, much more. By the way, this video I tend to make every week, and it takes me hours to make due to all the research involved. And plus, on top of that, I provide more or less a summary over the previous week or so regarding what has happened in our US housing market here. So again, thank you so much for joining me in today's video. This report was just announced on December 7th, which was Thursday, yesterday at the time of filming this video. But just like my previous videos, I did not even read it. Instead, go to realtor.com/research/data, click on this link right here, and it more or less takes you to this information. I'll provide a link in the video description below for this data here. So let's first talk about asking prices and on a national level. This is the median asking price for newly listed houses, actually increased by 1.2% compared to the same week 1 year ago. This marks the third consecutive week in which asking prices have been pinned at a gain of 1.2%. Something I noticed though is that prices have been relatively flat or up slightly on a year-over-year basis every week ever since late July. We're not seeing a sharp pullback in prices due to two main reasons: limited inventory levels of existing houses, historically speaking, and on top of that, because prices were falling much faster during the last half last year compared to this year. All right, changing gears slightly here, let's talk about housing inventory, or the change compared to a year ago. Because last week it increased by 3.1%. By my dumb analysis, this is actually the biggest annual increase since mid-June this year. There's also been more houses for sale compared to the year before that, now for 4 consecutive weeks, going back to mid-November, when at that time we were up by 0.6%. Now it's a gain of 3.1%. Before this increase over the past 4 weeks though, inventory was down year over year for 20 consecutive weeks. In my personal opinion, the reason why inventory has been increasing on a yearly basis here is due to decreasing home buying demand. So think of it this way: if there's fewer people looking for houses to buy, therefore it takes longer for houses to sell, and therefore of course we see fewer home sales as well. All these factors here causes inventory to increase this year. This is also what more or less happened last year as well, because last year new listings basically fell off a cliff, and despite that, inventory was still rising due to a sharp pullback in demand last year. Now, one thing that is a big change though, and something I noticed the other day here, is that new listings are a little bit higher compared to 1 year ago, ever since November. Even though we are seeing a decrease of new listings, it's not decreasing at the same rate last year. And therefore, that's one of the reasons why new listings is up on a year-over-year basis, at least according to the most recent trends we have according to Redfin here. So here's a look at that. Here's the number of new listings according to their data center here. So new listings, let me just add 2020 here. So new listings is up by 7.1% for the 4 weeks ended December 3rd. One thing I noticed though is that even though we're higher compared to last year, which is in black here, we're actually getting very close to 2020 as well as 2021's levels. This is much different compared to the summer months, where new listings were much lower compared to the past several years. Also, when looking at Realtor.com for the month of November, that's based on a report that was announced about a week ago. They noted here that new listings increased by 7.5% this November compared to November of 2022. Right here is 2022 right here. New listings basically fell off the map here, whereas this year we are seeing a seasonal decrease in the number of new listings, but still very low compared to 2017 through 2019. However, as I mentioned though, the difference between pre-pandemic levels and right now has actually getting much more narrow now. So for example, during the summer months, let's call it, what was this, in June? In June, there was just under 400,000 new listings this year. Compare that to 2017 through 2019, which is more or less right here. There's around 550,000 new listings. So the delta was what, about 150,000. But right now, if you look at this line here, it's going down, but not going down as sharp as it should. In 2017 through 2021, we saw a sharp pullback in new listings in November. This November, not decreasing at the same levels we saw back then. So we're actually getting very, very close to getting to more normal levels in the number of new listings. And this is going to be interesting to track, because if this happens where new listings go like this and we have more houses being listed for sale compared to pre-COVID levels, that of course will put upward pressure on inventory levels and of course downward pressure on prices. Time will tell, and I'll definitely keep you posted with the latest developments. In regards to inventory levels, take a look at this, because this is super important to have some clarity and also some perspective regarding the rise of inventory levels we saw in 2022 compared to this year. This year, this is according to AltosResearch.com. For the week ended December 1st this year, there's just under 556,000 houses for sale. Compare this to 1 year ago, there was around 550,000. So we have approximately 5,400 more homes for sale right now compared to 1 year ago. That's a small increase of 1%, which is much different compared to the 76% gain we saw in late February. So inventory levels were shooting up big time on a year-over-year basis this February compared to last February. Now here's the big takeaway you guys should be aware of though, because when looking at the year-to-date increase this year compared to the year-to-date increase last year, it is night and day difference here. So this year, this is the gains in the number of houses for sale for the week ended December 1st compared to the start this year. We have approximately 84,000 more homes for sale year to date. That represents an increase of 18% year to date. Compare that to 2022 though, at this time, we saw a giant increase of 258,000 more homes for sale compared to the start last year. That represented an 88% increase of inventory levels. So this year, inventory increased year to date up by 18%, but last year this time, we were up by 88%. So inventory levels nearly doubling last year, whereas this year only increasing by 18%. Now, something to be aware of though as well is that according to AltosResearch.com, inventory finally peaked in mid-November. That is highly unusual because inventory tends to peak in the late summer months. So we saw a late peak of inventory levels this year. And that of course was due to the fact that demand was decreasing because we had 8% rates. Something else you guys should be aware of though is that even though inventory saw a late peak this year and it's up on a year-over-year basis, we're still down by about 33% compared to the same week of 2019. Let's also have a look at the year-over-year changes of new listings according to Realtor.com, because new listings have been increasing on a yearly basis here now for the past 6 consecutive weeks. New listings are up year over year, partly due to the fact that new listings were falling much faster last year. As I shared with you guys, new listings were falling off the map last year, whereas this year, inventory or new listings is decreasing, but not the same rate we saw last year. That's one of the reasons why new listings are up on a yearly basis here. Okay, let's change gears slightly again and talk about how fast or how slow houses are selling right now. So days in the market is at 3 days faster compared to last year. So houses are selling about 3 days faster compared to the same week of 2022. In fact, this marks the 9th consecutive week in which houses on average are selling faster compared to 2022. This is a fairly big change though, because in the previous 58 consecutive weeks, houses were taking longer to sell. Again, a friendly reminder, days in the market is based on a closed home sale, and therefore that's definitely a lagging indication of our US housing market. Now let's also talk about the share of price drops, or the number of price reductions, I should say, because last week the number of price drops decreased by 8%. That marked the 27th straight week of year-over-year decreases as well, compared to the triple-digit gains we saw to start this year. So the number of price reductions was skyrocketing on a year-over-year basis early this year, and now it's down 8%. In my opinion, the reason why the number of price reductions is negative ever since June is due to two main reasons. Number one, inventory levels of existing houses still remains limited, again, down by about 33% from 2019's levels. So we have a limited amount of houses for sale. Therefore, that means there's less competition. If you're going to list your house for sale, less competition from other home sellers. And therefore, that leads to fewer options of home buyers, which of course leads to fewer price reductions by sellers as well. Number two, price drops surged last year. In contrast, the share of price reductions is relatively flat right now compared to the start this year. In fact, don't take my word for it. Here's a look at that right here. The share of price reductions right now is at 39%. To start the year, we were at right there at around 36%. So the share of price drops right now at 39% is also still lower though compared to a year ago at about 43%, but much higher compared to 2021 as well as 2020. And on top of that, it's also higher compared to 2019 at 34% as well as 2018 at approximately 34%. All right, that was a lot of information to go over in today's video. So here's a summary, and then I'll provide some predictions and also a summary of what happened over the past week or so regarding our US housing market. So number one, asking prices on a national level were relatively flat or up slightly on a year-over-year basis every week ever since late July. So not a lot of movement regarding the percent change of asking prices. Prices haven't been dropping from a year ago very much due to limited inventory levels of existing houses and because prices were falling at a much faster pace last year. Number two, housing inventory increased by 3% year over year last week. That marked the fourth consecutive week that inventory levels were up on a year over year basis. Inventory has been slowly increasing this year. Like I mentioned, inventory levels have increased by about 84,000 compared to the start this year. That's an 18% increase year to date. Compare that to the same time frame last year, we saw a giant increase of 258,000 more homes for sale compared to the start of last year, and that was an 88% increase. So inventory levels were skyrocketing last year, whereas this year, a small increase of about 18% so far. Also, the number of new listings is still remaining at low levels, even though they're up from a year ago. They're also getting very close to pre-pandemic levels though, so I'll definitely keep you posted regarding that. The low amount of new listings though is causing inventory to stay at historically low levels, again down by about 33% compared to the same week of 2019. Number three, the average 30-year fixed rate. I didn't mention that in today's video, but it's worth mentioning because the average rate for a 30-year fix has decreased by about 1 percentage point over the past 1.5 months. That causes a 10% increase in buyers' purchasing power, which is basically a night-and-day difference between what I have been reporting to you guys because rates were skyrocketing. They reached a 23-year high back in mid-October. Now they have been decreasing to more or less a 4-month low. And of course, because of that, that's actually causing housing affordability to improve. But in my opinion, like I mentioned in previous videos, We need to see prices also decrease as well to make housing affordability better for everyday Americans here. Because rates are more than twice as high compared to the 3% rates that we saw in 2020 as well as 2021, that of course is limiting the amount of people who are deciding to list their house for sale, and thus keeping inventory levels well below 2019's levels. Number 4, the share price drops is higher versus the same week of 2018 and 19, but lower than 12 months ago. So 12 months ago, the share price drops was at 43%. Now it's at 39%. Number 5, houses are selling faster for the past 9 weeks in a row. For comparison's sake, they took longer to sell for 58 consecutive weeks. That was August last year through August this year. Of course, that's a lagging indication of our U.S. housing market though. So what are some potential huge changes ahead, given the fact that we've had all this volatility in our housing market? And of course, a friendly reminder, I am not a real estate market fortune teller. Number 1, average 30-year rates have decreased by about 1 percentage point, as I mentioned, compared to about 1.5 months ago. That causes a 10% increase in buyers' purchasing power. However, housing affordability is still very low though, because prices are still high. And on top of that, we have low inventory levels of existing houses. And of course, prices are up compared to a year ago. Number 2, housing affordability is still a huge hurdle for home buyers on a national level, especially compared to the past several years. So rates have increased significantly over the past several years. And on top of that, the median sold price, according to data from the National Association of Realtors, has increased a whopping 45% from October of 2019 through October of 2023. So home sold prices should decrease though through the winter months, which of course would be normal. It's normal to see prices decrease during the winter months. Number 3, early signs of home buying demand have been absolutely all over the place due to all the volatility in rates. The most recent stats we have showing the number of applications for home loans, according to the MBA, for the week ended December 1st, decreased by 17% year over year. The MBA's purchase index is close to the lowest levels in about 28 years, even though the number of purchase applications was increasing back in November. Also, the National Association of Realtors reported that pending home sales in September fell by 11% compared to September last year. That actually marked the 3rd lowest reading on record. In stark contrast though, new home construction sales, which the U.S. Census Bureau defines that as a sales agreement signed between a builder or a home buyer or a deposit taken by the home builder for the month of September. So we're really measuring pending home sales of new home construction versus existing houses. New home construction pending home sales increased by 34% during that same time frame, whereas existing pending home sales decreased by 11%. And again, a friendly reminder, our housing market is highly rate dependent. So of course, the data coming in is ever changing and real estate is local. Number 4, sellers and buyers have exited the market, leading to a dip of new listings and pending home sales, especially compared to the past several years. If homeowners continue to decide that now is not a good time to sell their house, that will limit inventory levels. In my opinion, the direction of our U.S. housing market will depend on unemployment, mortgage rates, inventory, and of course, the balance between supply and demand. Number 5 is actually the most important one. I appreciate you guys watching today's video, and of course, for supporting my YouTube channel as well. A lot of work goes into making these videos, so I greatly appreciate it if you share it, like, subscribe, and of course, if you guys got any value out of today's video, please hit the like button. I really appreciate that as well. Hope you guys have an awesome day, and we'll see you on the next video. Bye.